Assalamualaikum warahmatullahi wabarakatuh. My name is Abdul Hakim bin Razali from BA 2425D. Today our group will present to you about Axiata Company. Axiata was incorporated in Malaysia in 1992 as a private limited company under the name of Telekom Malaysia International, or also known as TMI, which then managed as a division within Telekom Malaysia Berhad. In 2009, TMI changed its name to Axiata Group Berhad and launched a new identity, upgrading their position as a leading mobile operator in Asia. Axiata is a Malaysian multinational telecommunication conglomerate with extensive operation in Asia. Axiata offers a range of innovative telecommunication products and services. Axiata has controlling interest in 6 mobile operators under the names of Celcom for Malaysia, XL for Indonesia, Dialog for Sri Lanka, Robi for Bangladesh, Smart for Cambodia, Ncell for Nepal, Idea for India, and M1 for Singapore. Axiata Group's products and services include prepaid and postpaid mobile services, telecommunication broadcasting, and cable television services, internet services, enterprise solution, digital marketing and e-commerce services, mobile advertising and machine-to-machine solution, among others. Next is Axiata Vision and Mission. The vision is to be a new generation digital champion by 2022, while the mission is bringing affordable connectivity, innovative technology, and world-class talent to entire region.
Industry analysis is a market assessment tool used by businesses and analysts to understand the competitive dynamics of an industry. It helps them to identify both of opportunities and threats coming their way and give them a strong idea of the present and future scenario of the industry. For Axiata, the method of industry analysis factors such as technological, economic, political, and social. Technological factor. Axiata constantly strives to be at the forefront of technology and innovation in all our operating markets. To remain relevant, it is imperative that they constantly review and refresh their technology, and yet maintain financial prudence. Their capital expenditure intensity remains high as a result of the need to constantly invest in technology. Now, economic factor. Axiata's business of providing telecommunication, network infrastructure, and digital services have created significant economic value and opportunities, both directly and indirectly, to close to 2 billion people across the ASEAN and South Asia region. Additionally, as a committed long-term investor, Axiata has further supported and created non-economic value in areas identified as national priorities and agendas in the countries within its footprints. Next, political factor. Axiata is driven by their key values to maintain high ethical standards and good corporate governance, which they believe to be a key success factor when conducting business in the global, highly competitive, political and regulated and changing market. Deviation from group set standard and governance framework. Regulators and politicians are too concerned with these matters as they contribute to their national priorities and goals and give access to digital services to undeserved and marginalized segment of the populace. Lastly, social factor. Axiata's trusted relationship with customers, communities, government and regulators, suppliers, trade unions, industry bodies, among others, are key towards ensuring that they maintain strong relationship of trust with their stakeholders. Based on the common size for Axiata's statement of financial performance from 2015 until 2019 shows an unstable performance, where the percentage keep fluctuating until it reached at 2019 for operating profit. The highest common size for operating profit is at 2018, which is 34.89%. The lowest common size of operating profit is at 2017, which is 12.29%. The highest mean better because companies make enough in profit to cover their fixed payment and expand operation.
Liquidity ratio for the past 5 years' performance for Axiata Company shows an unstable performance, which indicates a bad short-term liquidity from year to year. This is because the current liabilities is more than current asset, which is more debt than cash liquidity in the shorter time period. It shows that the company has no ability to pay short-term debt obligations without relying on prepaid expenses and inventories in managing their short-term liquidity.
Efficiency ratio. The overall performance I can interpret where for inventory turnover ratio shows in an unstable performance where in 2015 until 2019. For account receivable turnover, they can collect its payment creditors successfully because the turnover is high in the latest year. Average collection period, the latest year which is 2019, is the most effective management of account receivable. Peak asset turnover. The lowest ratio is in 2016, which is not efficient in managing its fixed assets. Lastly, for asset turnover, the highest ratio is 2018, which is 0.75 times, which have efficient assets to generate.
Next is leverage ratio. Leverage ratio for the past 5-year performance for Axiata Company shows a bad performance since the total debt is beyond on the total assets and total equity. It indicates that the company's performance is more risky regarding on spending money in interest expense and generating revenue from both assets and equity. Since the company is totally dependent on debt financing, that will be cover up the capital in the businesses to maintain and sustain the company's capability in the current financial performance.
Based on the ratios, for overall, Axiata has enjoyed deferred profit from year 2015 until 2019. There are years they managed to generate profit from ongoing operation, and there are also years that they cannot be able to generate income and cannot perform their commitments. They can generate profit from the activities to pay their obligation and continue their commitments. For example, in year 2015 until 2016, Axiata can collect and generate profit from overall activities and commitments. But in year 2018, they are facing a difficulty to generate income and unable to meet their commitments.
In conclusion, Axiata has been known as the largest Malaysia-based telecommunications company who operates and manages products and services in Axiata Group. It directly shows how investors make an evaluation of the company regarding their past and current performance in order to maximize profits. There will be a return for their investment purposes. As the Axiata company comes out with a new 5G technology, there will be a step further or next move to the advancement of technology that will attract more people in terms of demand of the new product establishment. Based on the analysis, we can see that Axiata had a fluctuating performance for the past 5 years. It indicates that Axiata has an unstable return and low intrinsic value for the company. It shows that the Axiata company is not worth to invest as the company does not have an ability to give a higher return for the investment because the company has made the business growth at the full capacity by using debt financing that will be a source of revenue included in the business performance portfolio. Higher debt financing will give a lower perception image that reflects directly the investors' decision in generating profit for their investment purposes. Better performance will tend to have the better future prospect in the business as it could expand aggressively in the product and market development, especially in telecommunication industries. It also reflects the debt ratio where it is more than 50%, which is not quite good for the business as the company chooses to get more funds from the financial institutions. There will be both in the short term and long term period in generating profits. The unstable performance in the short term period that indicates in the current and quick ratio also give an overview that the company has least capability and ability to pay the short-term debt obligations. That will be the shorter time period for the valuation of the company, as it will be measured without relying on inventories and prepaid expenses within the time period. It simultaneously shows that the current liabilities was above the current ratio. This will make the company have least or less liquidity in the business operation. High risk taken from this company will lead to less confidentiality of investors to invest in this company. This could be a question mark, where the view of all investors will question how the company overcomes the solution if any unexpected event happen during the time period. Are there any possibilities that the company could be bankrupt or do not have an ability to distribute return for their shareholders? This situation will be difficult for this company since it indicates the unstable performance in the most financial analysis. There will be a company valuation indicator that indicates the overview of the company performance. Next is strategy. There are 4 strategies. The first one is decrease short-term debt. The company should be able to decrease the short-term liabilities because year by year, the net working capital of the company shows a negative value, which indicates the worst performance of cash liquidity in the short-term period. The company should try to impose a new strategy which includes equity financing, which will focus more on how to generate profits from assets and equities and not totally depend on the debt or liabilities of the company in order to sustain in the industry and be productive in the advancement of the company. It directly gives an overview to investors that it is worth to invest in this company since the company shows a good credibility in managing problems. By changing to equity financing, they will have a better and high capability in generating profits in the equities or assets between the shorter time period. The next one is increase fund. The company should be able to invest in any investment platform in order to gain more capital and return for the company to enhance the capability in generating funds to get fast liquidity. This is because to increase the total asset turnover, the company will diversify assets in various ways that will improve the investor satisfaction regarding the evaluation of the company, as it indicates the intrinsic value that will be revised from the company. More funds received will have a better future performance. The third one is reduce costs. The cost reduction refers to how the company cuts the cost of any outstanding expenses in the monthly commitment spending by the company. That will be implemented and measures to improve the profitability of the company. Good costs will be focused on the company's growth and aligned with the customer relation and needs of the customer, while bad costs do not match up with the company development and will lead to the wasting of resources for the company. The last one is inventory management. The company should be able to control and manage its inventories since it is the best way on how to be more efficient and act effectively in generating profits from inventory management. Inventory will be very sizable and manageable that takes up the amount of the company's capital that recovers the business performance. High level of maintaining good inventory management will make the company reach beyond the expectation of the customer needs that will directly fulfill the daily sales inventories as an evaluation part in the management of the company. That's all from us. Thank you.